Alright guys, so welcome back to my YouTube channel. So right now guys, in this video I want to show you guys my POI, what I'm expecting for GBPUSD. As you can see, this is GBPUSD, the 4 hours time frame. So guys, this video, if you are not following me, try and hit the subscribe button and like this video. And I want you guys to always to watch this video very, very carefully, because I'm going to be dropping a lot of updates here that you need to learn from. So sit down, understand, and watch this video. Now, if you look at this structure of GBPUSD, GBPUSD has been taking out the buy side liquidity for years now, or months. So now what you have to do as a smart trader, you need to follow the trend, especially newbies. If you know that you're a newbie, you need to follow the trend. But on this analysis, I will show you on how to trade this retracement that you are seeing and how to still catch this buy. So you need to be very, very observant and very, very watchful. Now, before I show you the analysis of this retracement, how to trade this retracement, let me show you this pattern. Guys, if you did not watch my last video, I better urge you to go and watch that video now, because I said something about this pattern in my last video, that these are the patterns that you need to be looking at for in Forex. Now, whenever you see these patterns, trade it with the whole of your mind. Don't be afraid, you will make money. First break of structure. So this is the first break of structure. Second break of structure. The liquidity sweep. Liquidity sweep. The price taps into your fresh forward order block or a breaker block around there. You swing your trade peacefully. This is for the buy bias. Let me draw the sell bias on, so you should not be confused. Wait. So this is for the sell bias. Now, first break, second break, the liquidity sweep, price taps into your fresh forward order block around here, and you swing your trade. Do you see? So these two patterns, always watch out for these patterns whenever you see them in the Forex chart. This is for the buy bias and this is for the sell bias. You make money. These patterns are the patterns that I watch out for. Very, very sweet patterns. This is smart retail money concept pattern in Forex that you need to watch out for. Now, going straight to the chart, if you look at this retracement, you know one thing about retracement is that you see these big banks, these big traders, investors, they are very, very smart. That's why it is very, very difficult for most traders to trade this retracement, because they set a lot of trap. Retracement is more like noise. From the word retracement, pullbacks is more like noise. That's why I will keep on advising that most of you always trade, follow the trend, follow what the market is doing. Don't go against it. But if I thought you want to go against it, make sure that yes, you apply your risk management, you know what I mean, and spot your areas very well. Stick to your plan. Now let me do the analysis of this sell. If I want to trade this sell right now, this is what I'm expecting. Now, first of all, there was a break of structure from here. Yeah. Second break. Now this is liquidity sweep. This is an turn liquidity. So this is not the area that we're now watching for the sales. Once price gets to this area, immediately after the sweep, you sell your trade. Do you get? So this is just it. Very simple. Put your 1:3, you are good to go. Now let me explain. You see this pattern that you are seeing here, this sell adjustment pattern, is also this pattern that you are seeing that I showed you earlier. Now let me explain what I mean here now, so you should get. Now if you look at the retracement, this is the first break of structure. Now this is the second break of structure. Now, why here is there a liquidity? Because this pullback is not complete. Why is it not complete? Now I want to show you a confluence that you need to be using to check for your pullbacks if they are complete or not. Now you take your Fibonacci tool, draw your Fibonacci tool from where the structure started from till where it takes out the low. Then you see that, okay, yes, look at this pullback, and this pullback did not pass this golden zone. It did not pass this golden zone area. I did make this pullback pass this golden zone area, to this place, to this zone. It would have been that, okay, yes, it's correct, that yes, there's no need for you to say, okay, you're waiting for price to come and sweep liquidity. But as price did not pass this golden zone, it's telling you that, yeah, this area now turns liquidity, which is here, needs to be swept out again, needs to be taken out before price will run. Now, the reason why this area is not valid is because this pullback is not complete. And how do we know that it's not complete? Because it did not pass this golden zone. I didn't mean that this pullback passed this golden zone to this area, would have said, okay, yes, this pullback is actually correct, it's complete, so there's no need for us to sweep liquidity. But as it did not pass, this is more like a trap. So why are we calling it liquidity? Because it took out this last CSI liquidity, this low that you're seeing. There was a break from here, that's why here's now a liquidity. Here was supposed to be an inducement, but the reason why it's not an inducement again, because this break of this SI liquidity here has been taken out. So that's why here now turns liquidity. So you need to expect the big banks to come and sweep these late sellers, tap into this breaker block area or another block area here and drop. If you are not waiting, or if you are not expecting this thing from this market, if this is not what you want to trade with this sell retracement for GBPUSD, I urge you not to trade. If not, you will just dash them your money free of charge. I'm telling you, you will dash them your money. But this is not what I want to trade. What I want to trade there is this bullish run. This one is my business, because this is the actual normal movement that I'm expecting. Then I swing my 1/3, I hold my piece like that. Where's my 1/3? Come here, yes, sharp. That's just it. I can still trade this one. That's only if it obeys what I want it to obey. If price does not get to this place, I'm not trading this here. If it's falling for me, no problem, I will leave it. It's retracement. You cannot kill yourself over retracement. At least it's highly risky than the normal movement. So this is what I'm waiting for. This is my big boy. So I want to the big boys we are waiting for the price here. Once the price gets to this place, we'll swing it together. We'll make money. But we can still trade this one. But if only it obeys our pattern. If it does not obey it, we leave it. Do you get? So it is very, very easy. Now, as a smart retail trader, what you need to learn how to watch out for, after your break of structure, expect price to pull back to an order block or a breaker block close to an order block before you can trade with peace of mind. Now, if price does not pull back to another block, use your Fibonacci tool to get the distance of if that area, which is the pullback, if it's valid or not. If it's not valid, then you can easily know that, okay, yes, if it's not valid, that's when if the pullback does not pass that golden zone. But if you pass it, then you know that, okay, yes, it's valid. But if it does not pass, you know that, okay, yes, this area now turns liquidity. You wait for price to just come and sweep it first before you enter. I don't know if you understand. If you don't understand, take this video back again and rewatch this video. You know what I mean? So it is what it is. I don't know. If you find this video very helpful, just do it to like, share, and comment. You know what time it is. So see you guys in my next video. I'll be dropping more and good information on this YouTube channel. So if you have not subscribed, better just go and subscribe, like, and share to your friends. You know what time it is. Alright guys, see you in our next video. Peace out guys.